Good morning and welcome back to Almus Market Mornings. We finally saw a relatively quiet session in the currency markets yesterday, perhaps an early sign of the holiday spirit kicking in across global markets. But on the other hand, precious metals kept investors on their toes, with gold, silver, and don't forget platinum as well hitting fresh all time highs this morning. The rising global political tensions between the US and Venezuela negotiations, and also combined with the growing expectations of further Fed policy easing next year, continues to fuel this rally. Good morning, JK. Do you see this as a start of another major uptrend in precious metals, just like we saw in August? And also, could you throw some light on as to why the near-term forward premiums for USD INR are at such high levels recently?
Good morning, Ishan. So precious metals have just continued their rally of the year, and um, they have come quite a distance from where they were early in this year. But to know whether it is further higher from here. We are already in uncharted territory in most of the metals, and it's very difficult to project where it would go. But only comparison you can make is that historically in 20 1987 80s, the gold had a much bigger rally. Currently we have about 100% maybe from the lows of this year. So around 4,000, 5,000, 5,500 could be a target for gold in the new year, particularly if dollar is going to be overall weak and there is going to be further easing by the Fed, in their policy rates. So the trend is not changing. We could have, of course, some sharp pullbacks if there is any, outside market sell-off where there is a dollar liquidity shortage and people might tend to take profit on their, hugely huge gains in these metals. But then the trend is very unlikely to change. Yes, talking of the rupee premium, isn't it strange now that we have a case of classic case of one-sided market shifting from spot to the forward market, and you see the amount of forward position, or rather the long positions in the market, have been one of the main reasons why the premiums have been higher, because the people who are running long positions are forced to either liquidate at a loss because the rupee has sharply appreciated from 91 levels, or they have to roll it over. That's one reason. The second reason is the corporate paying. When they started hedging their loan liabilities for long term after the rupee broke 90 levels, that is added to the selling pressure as well. And finally, even the importers, as well as the previously hedged positions need to be rolled over. That is also adding to the pressure on paying premium. And these premium, you see, rising by almost 1% in this month alone for 1 year, from around you know, one around 200 to now 300 paisa, or 2 rupees to 3 rupees, is quite a large move. And 1 month itself is showing around 45 paisa. Now, what this can do now, of course, is that with if people have uh, stabilizing view on the rupee, they might well liquidate the long position instead of paying such a huge cost for rollovers also. That can see some appreciation pressure on the rupee. So certainly, I think if we see the spot rate move up towards 89, 80 or so, I think there may be more pressure to sell the dollar rupee rather than roll it over at such a high cost. And this could, of course, be compounded by the fact that dollar is once again weakening. You have Chinese yuan and yen in the Asians, strengthening, and the global major currencies like euro and GBP are also, on the higher side. All of this making the rupee a bit undervalued. So there can be a case for rupee to gain some more with natural market forces, without the intervention of RBI. So that is the implication of the forwards that we are seeing. You see, if we talk about the currency market, if you look at two currencies, yen and the rupee, yen has a deeply negative real interest rate. India has a very high real interest, attractive real interest rate. But while rupee has, really not justified this kind of weakness, in at least in terms of attraction of investment, yen, of course, needs to be weaker, at least on this basis of, low real interest rate or the negative real interest rates. So that is where the actions of Bank of Japan is being closely watched. And of course, the market yields in Japan, 10-year yield going to 2.1%. So the Bank of Japan raising rates by 0.25% last week, and market now perceiving that their rates could go as high as 1.5% next year. So this is also being discounted by the market. That is why you are seeing the market yields higher. And one of the ways in which the yen's undervaluation can be corrected is by its the yields going up, and the funding costs in yen rising, which will make the borrowing and selling of yen in carry trade also reversed. So that this is one way in which the Bank of Japan can uh, reduce, or rather control, the weakness of the yen without having to actually intervene through selling of dollars. So both in case of yen and the rupee, if you see, the higher cost of borrowing may be working towards some strength in the currency. That is something that I would like to watch out from here on. Yes, otherwise, stock markets are holding up, rather having some making some headway every day. It's more of a Santa rally, seasonal December gains that we see, rather than any fresh change in the fundamentals. Of course, market will look ahead to the Q4 numbers in January, and the updated view on the economy, which will come out with more reliable data in January, after the government shutdown, which affected the numbers for October and November. In fact, today also we have a host of numbers. Q3 GDP expected to rise by, say, 3.3%. We'll also have industrial production and durable goods orders, and the consumer confidence number. So a host of data to digest in the US economy. And of course, then we slip into the holiday season. Next 1 week is very unlikely to be, very liquid market, and any reactions to news or events could be either muted, or it can be extremely exaggerated depending on the gravity of the news. So that's what we are in right now. Just slowly moving to the holiday period, but then we are also moving to very interesting levels. Gold moving towards 4,500, and yen at a sensitive level where there can be some, intervention, or the yield-led recovery in the yen is also possible. Thank you.
Thank you, JK. And just to summarize, we could see a target of 5,000 to 5,500 in gold for the next year if the dollar continues to weaken. And as we all see, the metals are being in an uncharted territory right now, so it's making it a free game for the metals to move upwards as well. And the huge number of long positions, the corporate paying debt, and the importers previously hedged positions are keeping the premiums really high for USD INR in the short term, as they are being able to pay a lot of premiums in the markets right now. And the dollar weakness weakens as the Asians continue to strengthen, along with Europe and GBP as well. And we can maybe see the strengthening come into INR today, and little bit of appreciation can be seen. And whereas the markets wait for the new year, as we will get a fresh updated data from the US, and some market movements will come only in the next year, as maybe we can see a bit of a muted market for the next 1 week due to the holiday period beginning now. Thank you all for listening. That's all for we have today for you guys, and we'll catch up tomorrow for a fresh round of updates.